What's up everyone? Today we're going to be talking about relative strength or RS. So relative strength by definition is a stock showing strength relative to an index. In other words, it's a fancy way of saying a stock is outperforming. Typically, you'll compare the performance against a major index like the S&P 500 or the NASDAQ. However, you can also compare the performance against other stocks or commodities. Relative strength is most notable when the market is in a correction, and those stocks that are showing relative strength are really where you want to put your focus. Nicholas Darvis, in his book How I Made $2 Million in the Stock Market, said, "I tried to detect those stocks that resisted the decline. I reasoned that if they could swim against the stream, they were the ones that would advance most rapidly when the current changed." So like Darvis said, stocks showing relative strength are the ones you want to focus on, as they tend to be the big winners when the market finally begins a new uptrend. Stocks can display relative strength in a multiple of ways, but these are the three main ways that I focus on. Number 1, the stock makes a higher low while the indexes make a lower low. Number 2, the stock recovers to new highs faster than the indexes after a correction. And number 3, the stock closes up on the week or the day while the indexes are down significantly. So let's go ahead now and take a look at some examples of each of these. First up, the stock makes a higher low while the indexes make a lower low. A great example of this is Netflix at the end of 2008 going into 2009. This chart shows Netflix on the bottom and the S&P 500 on the top. I've also labeled 3 different points on the chart, A, B, and C. You can see the S&P and Netflix both make lows at point A. If we move to point B, you can see the S&P is significantly lower at point B than at point A, while Netflix on the other hand is slightly higher. From there, fast forward to point C, and once again, the S&P 500 is lower than both point A and point B. While if you look at Netflix, it is significantly higher than both points A and B. Netflix managed to gain 118% during that time, while the S&P 500 made new lows. The next way we can spot relative strength is by seeing if a stock recovers to new highs quicker than the indexes do after a correction. Take a look at Peloton during the 2020 COVID crash. Again, we have the S&P 500 on top and Peloton chart on the bottom. You can see the steep decline from the COVID bear market took both the S&P and Peloton lower. However, look at how fast Peloton got back to its highs. Peloton managed to make new all-time highs while the S&P was still significantly off its highs from before the bear market. Peloton was clearly outperforming. Lastly, we can spot relative strength when a stock closes up on the week or day while the indexes are down significantly. Let's take a look at Celsius, and specifically these last 3 weeks on the chart. In week 1, the S&P fell by 2.41%, while Celsius gained over 11%. The next week, we had a similar story as Celsius gained over 4.24% as the S&P fell another 3%. Now, why you really want to be paying attention to this is because something like what happens in week 3. Celsius was clearly showing relative strength while the market was falling the prior 2 weeks. In week 3, the market bounced and gained 6.58%, which is a very big move in the index. But during that same week, Celsius gained over 20%. So, there are 3 ways to identify relative strength, and while you can't buy on relative strength alone, it is a major characteristic of the best winning stocks, and when paired with great fundamentals and a proper basing structure, it greatly increases the chances of success. Thank you for watching. If you enjoyed this video or found any of the information useful, please consider hitting that like and subscribe button below to stay up to date with all my latest videos.